Hello traders, Gary Wagner here. Approximately 12 a.m. Thursday in Honolulu, Hawaii, the 15th day of September, and this is the daily report for gold. In a surprise move today, the European central banks said it will begin to lend dollars to the euro area banks in a series of 3-month loans as the region's debt crisis limits markets' access to U.S. currency. In a move which has been sanctioned or approved, I should say, by our Federal Reserve, and a surprise move by Geithner over at the Treasury Department, we saw gold today in reference to this move down over $40 at one point, currently trading at $17.88, $17.89, putting it off about $30 on the day. We did have a stop in this area. That stop was effectively hit and took us out with a loss. In terms of what we're looking at today, is it a game changer? And my sentiment is, in a lot of ways, it actually is, because for the first time, we have a actual game plan, a concerted game plan that's globally sanctioned to put money back into the Eurozone system itself to work with the debt crisis. Now, the question that I obviously ask is, can we continue to fix things by putting more money into it? But that's something for another day. The game changer is that the perception, the trader and investor sentiment has absolutely changed, as it should, for the simple reason that there is a concrete plan in place, and that plan itself will flood the European Union with dollars, US dollars, to loan for capital. Now, what does that mean for us? Well, first of all, we have been tackling with the idea of whether or not this particular move that we have seen lately, this correction we have seen, is a ABC correction or a what's called a triangle correction. And right now, of course, it could go either way, but the odds, which I believed were in favor yesterday of a pennant breakout, a triangle correction, actually were softened a little bit. And as you can see, when we look at this market, for example, this pennant formation that we saw forming, let me try to put that in fairly quick for us. We were doing it, and that would have been based on this. You could either do it on these sets of lows or on these sets of lows, but as you can see, we had an utter breakout, and that breakout, of course, was to the downside right in here, as you can see. Now, since that point, it has recouped a little bit and traded off of these lows. But traders, my belief at this point is that we probably have not witnessed the total end of the correction. I could be wrong with this, but if it will find support in this area, my sentiment is, in terms of what we are looking at in terms of technical support, you do have support along this line here. This is the 23%, and that's 1810. I look at that support in a couple of ways, both from Fibonacci as well as just trend analysis, and you can see this top that was resistance. You can see points in which this market found really strong support all the way through here. However, that was to change last night. Last night, this market was fast. It was furious as it came down like this. As you can see, this market tested a couple of areas. In fact, went to about the 1780 area. So, where do we think it's headed from here? Well, if it firms, you can see it firming in this area. My sentiment is, though, that it will probably go to test something a little bit lower. And what I would be looking at, if this is going to be a standard correction should take us at least to what's called a flat, which would be an equal low here, or test this area here, which is about 1720 to 1730. Another way that we can look for logical areas of support in this market is simply by looking at our Andrews pitchfork, and as you can see, we've got our center line right in here, and then the sides of our handle on this side. Now, what I've done is simply taken the angle from the Andrews pitchfork made a copy of that and pasted it to the upper highs here so that we would have a new channel. My sentiment is, and we'll have to see, but as you can see, when the market came up and hit this high, it has on 2 occasions tested it and been unable to breach that $1,900 ceiling. You can see that the market is coming back down. And so the first level of support that we're really going to want to see if it holds is going to be this handle right in here. And so what we'll want to do is, if the market continues to trade lower, we'll want to see how it reacts right here. As for the time being, I simply want the dust to settle. I want some time to go by, at least the weekend, if not longer. I want to see how the overall reaction sinks into the investor public at large, and really, more than anything, let the dust settle. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up and update. Bye-bye.